Third part of our series out this morning on capitalism. You know, capitalism's been, under attack by a lot of the Democratic left here, especially running for office now. Bernie Sanders, Elizabeth Warren, they've been openly kind of attacking the entire system, saying, this is terrible and we need to basically end capitalism for socialist ideas. We need to pay for free college, free health care, all these type of things. And, but this has been, political arguments that resonate well with people that are struggling to get by. And unfortunately, if you take a look at the financial makeup of America in general, 70, 80, 85% of Americans are really kind of just struggling to make ends meet. Millennials in particular are struggling with student loan debt. Credit card debt is at record highs. And the issue is that we see these corporate CEOs, et cetera, that are doing exceptionally well, right? We're seeing CEOs of companies making $1 billion a year in income. Jeff Bezos, richest man in America, richest man in the world right now, from Amazon. So people go, well, how is this capitalism thing working so well when we have a few people at the top making all this money and then everybody else is struggling to get by? And so these arguments about capitalism from people like Elizabeth Warren and Bernie Sanders, AOC and others, has certainly resonated well with the media. And the media has been writing articles and really, promoting this idea that capitalism is bad. So we've been writing a series of articles over the last week or so. We're finishing it up today with the third part. So if you actually go to our website, realinvestmentadvice.com, you will get to see the latest issue of this, and inside there are the links to the two previous articles as well. Today's title is article, Capitalism is the Worst, Except for All the Rest. And the point about this is, and the point of this article is really kind of twofold, is that one, we have a government that is now driving the very basics of socialism. And what I mean by that is that socialism in and of itself requires money, and it requires a lot of it. Capitalism, by its very nature, it requires less debt. In order to be successful on a capitalistic basis, you cannot be heavily leveraged in debt. It's because debt deters growth. And just think about this as your own family kind of dynamic, right? So it's you, your wife, a couple of kids, and you make an income, right? So you have a certain amount of income coming in every month to pay your bills with, et cetera. And then your leftover, your savings, you can do other stuff with. You can go on a trip, or you can buy something that you want to buy, et cetera. But as you begin to live beyond your means, and you put more and more stuff on credit card debt, then all of a sudden those credit card payments begin to eat up any excess that you have. So there's an inability to continue to buy other stuff that you want or to do stuff because now you're just trying to keep up with the debt payments, right? So capitalism, by its very nature, requires, in order to be successful at capitalism, requires lower levels of debt because debt deters growth. And when you have a government that is running a $1 trillion deficit, it really has no compunction to talk about the deficit. It's interesting. There was a survey out last week, and basically this was a survey of Republicans, right? They surveyed Republicans, and this went back and they looked at the conversations surrounding the deficit prior to the election and post the election of Donald Trump. Prior to the election of Donald Trump, during the Obama administration, Republicans had a primary focus on the level of the deficit. They were concerned about the deficit. And when they polled Republicans, 80% of the people they polled that were Republican-leaning said that deficit was their number one concern. After the election of Donald Trump, we are now running a $1 trillion deficit, and deficit as a concern for Republicans now falls right around the 20% bracket. So it really just depends. The deficit apparently only depends on if your favorite candidate is in office or not. But the reality is that a lot of the problems that we experience in terms of economic growth, sustainability, trying to get higher rates of growth, trying to make ends meet for the average American, really kind of all comes back around and focuses on debt. So in order for for candidates like Elizabeth Warren and Bernie Sanders to do things like Medicare for all and free college and no more, a guaranteed basic income, whatever their proposals are, it requires a lot of money. And in order for there to be a lot of money without consequence, so to speak, is that the government simply just prints it and gives it out. And this is far and beyond what the government collects as taxes. So again, the government generates revenue by taxing its citizens. The theory for the left is that I can just print, as long as I can print my own currency and just issue debt, there's a consequence for that, right? It destroys the value of currency when you just print currency to no end, right? There's a supply-demand balance, and the more supply you have, the less value that something has, and that's the same true as with a dollar. That's why the purchasing power of a dollar used to be $1 in the 1900s. It's now about a nickel today. But the reality is that deficits are not self-financing. Deficits can be self-financing, and this was something that Dr. Woody Brock discussed in his book, American Gridlock. That if you take debt, right, if I borrow money, here's a good example. I'm going to go to the bank and I'm going to borrow $10 million, and I'm going to buy a piece of land with it, and I'm going to build a commercial strip center that I will then put people into that will rent the properties and create an income stream. And eventually I will sell that, right? So I can borrow money at the bank. I can borrow 20% of the value of the property. So I borrow $10 million. I can buy an $80 million property, build a huge, strip center out of it, fill it up with tenants. The value of those leases that I have, those are 5-year, 10-year leases, whatever they are, those have value. The revenue stream has value. I wind up selling the property to somebody else for, say, $100 million. This happens all the time. Real estate you can make a lot of money in real estate doing this. So, but in that example, the deficit, the debt that I borrowed, had a huge return on value. So the deficit was, in this particular case, self-financing because I invested those dollars in a productive asset. The government used to use money like that to build things like the Hoover Dam, the Tennessee River Valley Authority, and other things that created jobs, but also created a long-term revenue stream that paid for the debt over time. When we borrow $1 trillion in debt, and 98% of what we are borrowing is going to non-productive investments, then that becomes problematic because we're not getting a return on that investment over time. And so when we're funding things like Social Security, Medicare, Medicaid, prescription drug benefits, social programs of a variety of forms and fashions, subsidies for things like electric vehicles, etc., those don't have a productive return on investment over time. So the debt continues to grow, but we don't have a return on that investment come in, which means then that we have to depend on taxpayer dollars to continue to fund the difference. About 96% of every dollar that we bring in tax revenue is simply spent on Social Security, welfare, prescription drug benefits, etc. That's it. Interest payments on the debt. That's it. What 3 or 4 or 5% is left over from tax revenue barely even scratches the surface for things like, the Education Department, the Department of Energy, the Department of Defense for defense spending, etc., which is why we're running this $1 trillion deficit. We've got to borrow all that difference between what we bring in tax revenue and what we want to spend money on has to be borrowed. Right now we're up on a debt ceiling again, right? We haven't passed a funding budget. When we do, we're going to increase spending by another $1 trillion or so. But the important thing here is that the reality is we've got, an economic growth right now that's been running at about 2% on average since the turn of the century. And we have now come to this consensus idea that 2% growth is normal. 2% growth in the economy used to be determined borderline recessionary because you are only keeping up with the rate of population growth at 2%. You have to be above 2% to achieve what's called escape velocity. In other words, the economy is growing faster than the rate of population. You're actually creating economic prosperity. At 2%, you're simply just keeping up with the rate of inflow of people coming into the economy. If we go back and we look at historically the difference between, if we strip out the debt out of the economic growth, and we say, well, how much economic growth have we had X debt? We haven't. We actually have an extremely negative economic growth rate without debt. So in other words, we're using between $3 and $4 of debt right now to create $1 worth of economic growth. So the problem with socialism and all these ideas is it never works anywhere. You go look at any country that has employed socialism, and you have a lot of poor people. And in fact, Aaron Beck from the Wall Street Journal, he wrote this tweet. He said, "The introduction of capitalist reforms in communist China has lifted hundreds of millions out of poverty, but it had a drawback: rising income inequality." Now, think about that for just a second, because, we're in such a hurry to change America into a socialist system that we want to be like China. We want to be like Venezuela. We want to be like these other countries that have this equality of income across the economy. There's no equality of income in China. You have the rich politicians, the people that are in power, have all the money, and everybody else is poor. Russia, you have the oligarchs, and everybody else is dirt poor. You go to any socialist countries, Cuba as an example, you have the rich politicians, the rich families, the Castros, and you have everybody else is dirt poor. Wealth inequality is the greatest in economies and economic structures outside of capitalism. Capitalism has problems, not going to deny that. But capitalism lifts people out of poverty. Go back to Aaron Beck's statement. Let's break that down a bit. Introduction of capitalism into China lifted millions out of poverty. That's a good thing, right? We now have millions of people in China that are no longer living in poverty. Inequality was created because those individuals decided to take advantage of those capitalist opportunities, created wealth for themselves, and lifted themselves out of poverty. They took advantage of the opportunity and did something with themselves that made them wealthier. The others that didn't, right? They didn't take advantage of the opportunity, and they're still poor. Here's the other thing. If capitalist introductions into China lifted millions out of poverty, that means that everybody was poor to begin with. So what is important, and this is what Daniel Lacal said, capitalism gets its power and has created the greatest increase in social welfare in history from embracing human ingenuity and the positive forces of innovation, open markets, and competition. Perhaps the greatest strength of free markets is the ability to nimbly adjust to new ideas. Markets are always looking to do things better. We can apply that same logic to capitalism itself to improve capitalism further so it can provide even greater social welfare. And he's absolutely right. But you look anywhere in the world and you compare capitalism to any other form of economic environment, capitalism has its problems. Capitalism is the worst economic system on the planet, except when you compare it to every other system on the planet, which is also why the wealth standard in America is head and shoulders above the wealth standard of any other country in the world. The greater good can only be achieved by making the good greater. Be right back after the break. Writing down the wall, very superstitious, let it back the ball.
Got questions for Lance later? Ask now at realinvestmentadvice.com.